What's the biggest risk today in the Fed minutes?
Well, I would guess that the tone would be more hawkish even than anticipated. I mean, we heard a very hawkish tone coming out of the various comments that have been going around, with Powell saying things like they may go beyond neutral or we're a long way from neutral. So if it's even more hawkish, I would think that that could affect the bond market.
And just to put it out there and get rid of it, the president's comments on the Fed constantly, are they just noise?
I would put it in the category of noise. I'm sure it's not terribly well appreciated by people at the Fed, getting this kind of public criticism. On the other hand, I think that they're able to kind of compartmentalize and push that away.
Kathy, good morning. It's Guy in London. Will the FOMC give any hints that it believes that the trade tensions are inflationary? The recent move up in yields, well, that was a real yield move. If we get inflation on the top of that, that could really change the game.
Yeah, I think they're more focused in terms of inflation on the labor market and the potential for the tightness in the labor market to drive up wages and cause inflation that way. They have expressed concerns about tariffs, but it's kind of a double-edged sword. On the one hand, it raises import prices, but it also diminishes growth. So I think that they are able to look through the trade tensions a little better than they are able to look through the problem or the issue in the labor market.
A lot of people are trying to understand the framework, Kathy, that the Fed is working to. They're trying to understand where the equilibrium rate is, where R star is. Do you think we're going to get, again, any hints as to how they're structuring the framework, how the discussion actually works internally in terms of whether or not they have an understanding where R star is?
I wish they would provide that information, but we recently had Williams, who, is the architect of one of the models to determine the neutral rate, come out and say that, it's maybe not as good a guide as he had once thought, or that the models had indicated. So I doubt that we're going to get anything really precise about that, but I do think we have to take the projections the Fed is providing to say that's probably around, where the market has it, around 2.75% to 3% would probably be the neutral rate.
We have a great story on the Bloomberg today about hedged positions elsewhere, not the United States, and how lucrative that's been for managers. How much of that are you doing at Charles Schwab, or inviting people to do?
Well, we haven't really embraced that because it's probably more of a temporary thing than not. But it is, for foreign investors now, it becomes a headwind for them to invest in the U.S. market. So for U.S. investors, we really haven't looked very favorably on, say, European bonds for quite some time because the yields are low. But I do think it's a bit of a headwind for the U.S. market.